Hi, welcome to another session of ACCA F5. Once again, I'm called John, and I'll be taking you through this session. Remember, you can give me some feedback at john.ntende@gmail.com. So today we're going to look at a syllabus area called decision making, which is critical for your F5, and specifically we're going to be looking at short-term decisions. Now, the basic concept is something called relevant costing. So the question is, what is a relevant cost? So a relevant cost is three things. It is one, it's a future. Two, incremental. And three, it is a cash. So a relevant cost is a future incremental cash flow. So if something happened in the past, it is not a future cost. It is referred to as a sunk. So sunk or historical costs and not relevant costs. It has to be incremental, meaning that fixed costs, okay, fixed costs are not relevant. And finally, it must be a cash flow. So things like depreciation, and amortization are not relevant. So why is this critical? So the basic concept for short-term decisions is that you look at the relevant costs and you try to work out the benefit of making a decision versus the costs. And remember, you're doing this using relevant costing principles. And the decision rule is very simple. So the decision rule is, after you compare these two, the decision rule the basic decision rule is you proceed if the benefits are greater than the costs. So that's it basically for relevant costing principles. So what we need to know is what kind of decisions do we need to take. Okay. What are some of the decisions we need to take? One, we may need to make something or buy it. So once again, you look at the benefit versus cost for making the product, then you look at the benefit versus cost for buying, and you make the decision based on if the benefits are greater than the cost or vice versa. 2, we can look at something called outsourcing. Outsourcing basically means someone else does something for you, of course in return for payment. So basically you outsource something. So same principles once again. What other decisions would we make? There's something called shutdown decision. So you have a factory, okay, which you need to close down. That's an example of a shutdown decision. You could also think of something called further processing decisions. Same concept. Okay, further processing decision. So this is where you have joint products, and I've already done a detailed lecture on this. Please look it up. You should be able to have an appreciation of. I did a detailed example of further processing decisions. But it could be any other decision. For instance, it could be opening up a new branch or service product line. Okay, so you can use the same principles to do such a thing. So that's the basic theory. Okay, this is the basic theory. What I want to do now is do a real exam question, something which came up in June 2009. Okay, here we have the paper. So this came up in June 2009. Please download this paper from the ACCA website, ACCA Global.com. Pause the video, read through question. Let me just get the question for you right now. Question 4. Okay. Bits and pieces. So just pause the video right now, download that question, and let's try and go through this. Okay, so I'm assuming you've read through the question now. So what we want to do is try and answer this question using the theory we've learned, which is basically relevant costing. So the first thing you want to do in an exam is go straight to the requirement and try to gauge how much time and marks we need. So part A, we are being told to calculate whether Sunday incremental revenue exceeds the incremental costs over a year, and on this basis reach a conclusion as to whether Sunday opening is financially justifiable. So what we're doing is the incremental revenue. Would be the benefits, so versus the costs, and the decision we are trying to make. Okay, the decision we are trying to make is an opening decision. Okay, so and we're going to base this decision on relevant costs. So remember, what's a relevant cost? It has to be something in the future. It has to be incremental. And it has to be cash flow. Okay. Part B is a discussion question. We're looking at whether the manager's pay deal is likely to motivate him. We shall look at that shortly. And then C is also a discussion question, discussing whether price discounts are favorable on Sunday. So part B and C, we shall look at them after reading through the question and be able to formulate some kind of sensible answer. So once you have an idea of what you need to answer, you can now go back to the question and try to read through it. Okay, so let's briefly look through the question. Remember, we're trying to identify the additional costs and the additional revenues. So they're telling us there is a store which has been opened for 6 days per week for 50 working days, but we want to open on Sunday. We've been told that daily sales are about 10,000 and we have a margin of 70%. Second paragraph. The margin on Sunday will be 20 percentage points lower than the average and on the other days. So the margin will be the current, which is 70%, minus 20%, which is equal to 50%. So this is the gross profit margin. That's what this statement means. That's what it means. There's another statement here. Sunday sales revenues are expected to be 60% more than the average daily sales. So what does that mean? It means that Sunday sales Sunday revenue is equal to 60% more. That means it is 160% of the daily sales, and the daily sales are 10,000, which gives you 16,000. I hope that's okay. That's what it means by that statement. That's what it meant by that statement. Okay. So we can go ahead to calculate the additional revenue. Okay. the incremental or additional revenue will equal to the Sunday sales, which is 16,000, times how many weeks? How many weeks? 50 working weeks, meaning the 50 Sundays. And what does that give us? That gives us, use your calculator, it should give us 800,000. So the 16,000, so are you seeing this figure? This way I'm getting the 16,000. So that's your additional revenue. That's your incremental revenue. So let's read through the rest of the question and see where the other figures are coming from. So this statement, BP buys all its goods from one supplier. The supplier gives a 5% discounted on all purchases if annual spend exceeds 1 million. Now, a good trick in the exam is when you see a statement which doesn't make a lot of sense, what you need to do is first keep it and try to do the simple bits first. So that's what we're going to do. Let's first leave that statement. It looks very complicated. We shall get back to it. Okay. Next, we're talking about the labor costs for the sales assistants who will work on Sundays. They're going to be paid time and a half. Can you see this? Time and a half. But their normal rate is $20. Okay. So the new rate will be time and a half is 1.5 times 20. Okay. New rate is equal to 1.5 by 20. We have 5 sales assistants who are going to work for 6 hours a week. Okay. So the labor cost, okay, will be the new rate, which is 1.5 times 20. We have 5 sales assistants who are working 6 hours and who are working 50 weeks. Okay, I hope that makes sense. So let me just redo that right here so that it's not very confusing. So labor cost is going to be 1.5 by 20. This figure here is the new hourly rate. There are 5 assistants, and this here is the number of assistants who work for 6 hours. This here is the hours. Who work for 50 weeks. Okay, this here is the number of Sundays. Okay, does that make sense? And this here is equal to, please use a calc and see if you can get this correct, 45,000. Okay, so 1.5 by 20 by 5 sales assistants by 6 hours a week by 50 weeks in a year. So that is the labor cost per year. This additional revenue is also calculated per year. So that is your new labor cost. So we finished that part. Next, we move on and read the rest of the question. So the next paragraph, the staff will be supervised by a manager who is employed by the company and paid an annual salary of 80,000. Now, this annual salary here is not incremental. Not incremental. And therefore not relevant. So it doesn't matter whether you open on Sunday or not, you're still going to pay him the 80,000. So this is incremental and not relevant. Make sense? I hope it does. But there is another point here. It will also be paid. You will also be paid 1% of extra sales on Sunday. So we can calculate a manager bonus. So it's 1% times extra sales Can you all see where I got 800,000? Right here. Extra sales is 800,000. So it's the figure I'm using right here. Okay. Let's move on. Next paragraph. The store will have to be lit at a cost of $30 per hour. So we have lighting cost, $30 per hour, and heated. So we have heating costs and lighting costs. But there's something else on heating. The heating will be up for 25 winter weeks and will come on 2 hours before the store opens. So that means the heating time will equal to 2 hours plus the original hours, which is equal to 8 hours. Makes sense? So lighting costs. Remember, the rate was being given. We've seen it is $30 per hour. There are 6 hours. And remember, there are 50 weeks. And this gives us 9,000. Use a calculator and confirm this figure. The heating costs remember the rate has been given us 45. The new time we've calculated is 8 hours, but it's going to be open for 25 weeks in winter. So this gives you 9,000. Back to the question. The rent of the store amounts to 420,000. So the rent is, it's not incremental, and therefore not. Please, in the exam, make sure you actually write this down. Make sure you actually, because there are marks for saying that something is not relevant. So simply, manager's salary the manager's salary and the rent are not relevant because they are fixed costs. Make sense? So now that we've reached the end of the question, it's now time to go back to the complicated bit. Okay, which is what we want to find, and the purchasing cost. B&P buys all its goods from a supplier. The supplier gives a 5% discount on all purchases if annual spend exceeds 1 million. Okay, so let's try and evaluate the incremental purchase costs. So incremental purchase costs is equal to new annual spend less the current annual spend. So how do we get the new or the current annual spend? How do we get the current annual spend? Now you'll notice that the purchasing cost is the same as your cost of sale, right? Now, we've been told that the GP margin is currently 70%. What this means that the cost of sale, okay, should equal to 30%. So that the total here is 100%. That makes sense. And this 100% represents the revenue. Okay. So your cost of sale will be 30% of your revenue. So cost of sale will be 30% of the current spend. Remember, we're told that we spend 10,000 daily. So this is your daily sales. But we're working how many days? 6 days, Monday to Saturday. 6 days times how many weeks? 50 weeks. And what does this give us? Of course, this gives us 900 meaning that we are not eligible for the discount at the current level of spending. Are you seeing this? We are offered a 5% discount on all purchases if the annual spend exceeds 1 million. So this annual spend doesn't exceed 1 million, and therefore we are not eligible for. Okay. So since this is less than 1 million, discount doesn't apply. Okay. So how about what is the new purchasing cost? Okay. What is the new purchasing cost? Okay. We need to find what it is. Sunday expenditure will equal to the corresponding cost of sales, right? And we are told that the new cost of sales is 50% times the new revenue, which is. Now, I guess you've forgotten where this 50% comes from. Let me just show you where it comes from. We calculated it already. Are you seeing this? Are you seeing this figure here? The GP margin, okay, will be 20% points lower than the average spend. So 50% is the new margin we are making on Sundays, but we are making 800,000 in sales. That means the purchasing cost is 400,000. 50% of 800,000 is equal to 400,000. Okay, so that's the Sunday expenditure. So total new expenditure will equal to the Sunday figure, which is 400,000, plus the 900. Now, do you remember where the 900 is coming from? The 900 is the current level of spending right here. Okay, so I'm trying to see if I apply for a discount. So you can see that is 1.3 million, meaning that the discount applies. Okay, so if the discount applies, that means that the actual expenditure will be 1.3. We're given a 5% discount. That means the new expenditure is 95%. How did I get 95%? It's 100% minus 5%, which is your discount. And this figure here is supposed to be, please check that this is accurate. Okay, so once we have that, we can now calculate the incremental purchasing cost. So incremental remember we said it's equal to the new, which is 1235 minus the old, which is equal to, and this gives you, now you can see this one is a bit complicated, but the trick is that if you had done the simple parts first, even if you gamble your way around this part of the question, you still make a decent attempt. Okay, so once we've done this, what is left is now just adding up these figures. So the benefits, we had the incremental revenue, which is 800,000. We had purchasing costs, which we found to be 335. We had the manager's bonus, which is we had the lighting costs, which were 9,000. We had the heating costs, which were 9,000. We had the new staff costs. The new staff costs were, do you remember, 45. And we get a positive figure of, and remember the decision rule we talked about, if the benefits exceed, that means the conclusion is that opening on Sunday is financially viable. Okay, so that's it. Opening on Sunday is financially viable and justifiable. Okay, so once we reach this point, the rest is theory, which we can briefly go through, but I want to refer to the detailed answer question, which you can still download from the website, to briefly discuss where the manager's pay deal, time off, and bonus is likely to motivate him. So what was the deal? The bonus, let's go back briefly. So the deal is that he works on Sunday, okay, and then he takes a day off during the week. So here you can think of a few ideas which come to mind. For instance, if the manager is a Christian, it may not be good, okay. For instance, if you look at the time, okay, you can briefly discuss the effects of working on Sunday. So it may disrupt Sunday service if he's a guy is a Christian. It may also disrupt family arrangements. Then about the bonus, Okay, how about the bonus? The bonus has been given us. We've calculated it to be. How about the bonus? Remember, we calculated it to be 8,000. But remember, there 50 weeks. Okay, which is about 160 per day. Now let's compare it with the staff. Okay, the staff are earning 1.5 times 20. You remember the 20? But they're working for 6 hours, and this equates to 180. So just imagine a scenario where they are the manager, okay, and you're being paid much less than your staff. Will that motivate you? This is likely not to motivate him. So you can go, we're looking for 4 marks. We've discussed the bonus and the time. So please always try to break down the question. So they told us to discuss the pay deal in terms of time off and bonus. So we've clearly shown that, and we've also mentioned whether this will motivate him or not. Okay? So that's the basic way of answering this. We've talked about both, and we've shown that this won't motivate him. For a better answer, you can go ahead and suggest how best to motivate him. For instance, things like give him a better rate. Okay, you can also have a flexible working arrangement where it comes, for instance, instead of coming every Sunday, he comes, he misses out one Sunday in a month. Okay, so that could be a flexible arrangement. So a better rate and probably a flexible arrangement to cater for the time element. Then the next 4 marks, we're looking at the discounts. We're offering substantial price discounts and promotions. Is a good suggestion. Whether that is a good suggestion. So what would you talk about? Remember, the margin is now 50%. Okay, and yet before it was 70%. So one, is that a good thing or not a good thing? It depends on how you look at it. But the key features is what? Is reduced revenues. Okay. Then probably you may attract so many people on Sunday that you have congestion at the queues, congestion and long queues leading to poor service. Remember, what the examiner wants to see is that you can try and think a bit, not just cramming things. What else could happen? People may change their buying behavior such that instead of coming during the week, they come on Sunday, so that at the end of the day, the net effect of opening on Sunday is 0. So you could talk of change of buying patterns. What else can you talk about? 4 points. This can do for now, but the key point in answering this is you have to be as practical as possible. Okay, so we've talked about the discount, that it may lead to reduced revenues, to may cause congestion, people may change their buying patterns. So if you give 2-3 well explained points, you're likely to get a good question. So this is a very good question, and we've covered all the salient features. We covered the theory. We've covered the theory of relevant costing, which is a future incremental cash flow, and we've used the theories to make a decision, which in this case was an opening decision. Remember, you can give me some feedback. The email is right here, john.ntende@gmail.com. We've come to the end of this session. Please look out for my other videos, and I wish you the best in your exams. Thank you.